Greetings from the FxPrimus webinar, the safest place to trade. We want to provide all of our clients with the knowledge they need to trade profitably. Enjoy.
Good evening, everyone. Okay, so welcome to today's session. Just as we start, we do have the CPI data coming in. So just very quickly, let me just check if there's not much of a movement, right? So anyway, we'll talk a little bit about that. But basically we'll have for me, I'm actually looking at position to buy the dollar Canadian, right? We'll talk a little bit into the details of that. With the CAD data coming in a little bit weak, as we're speaking right now, potentially we may see a bit more upside for dollar CAD. So we'll definitely go into the details of it as we progress in today's session. Okay, so what we're going to do over here, today we're going to be focusing more on the market analysis and market outlook. So what I'll be doing is to share with you an overview for the opportunities that you can keep an eye on for this week. Okay, and from there, after that, if you have any particular questions or you have any particular instruments that you'd like me to do an analysis to share my view, feel free to just type it into the chat. Okay, and then we'll then be able to discuss about it. Okay, so as we're speaking today, we do actually have this data out. Basically CAD CPI is still very important, right? So that's where I'm looking to actually trade it as we're speaking. So this is coming out, generally worse off than what was anticipated, which in a way is actually a good thing, because it means that inflation is coming down. But of course, that also can potentially translate to weakening of CAD, right? So, what we're looking at right now is generally for the week, what are some of the important news that you need to be aware of? Okay, so of course, this just happened. So going into tomorrow, Wednesday, 28th of June, we do have a couple of speeches from various central banks, right? So we have the pound, you have the euro, you have the yen, and of course you have the dollar. These are happening all at 9:30 tomorrow. My suggestion is, of course, expect some kind of volatility in the market, but speeches are always very difficult to trade, right? Which means you can't really focus on a particular direction, and sometimes it can just spike up and then returns back down, or it can just spike down and then comes back up almost instantaneously, right? So speeches, try not to trade it, is very tricky, but do expect volatility in certain speeches, right? And then after that, we don't really have much on Thursday. Okay, I don't think these are going to be very crucial. And then on Friday, we have the core PCE price index coming in from the US. That's going to be important as well because that tracks inflation. Okay, so generally this week's in terms of news event is slightly quiet as compared to like last week. So if you take a look like last week, quick summary, we have SNB raising rates, we have Bank of England hiking rates in a surprise element with up to 0.5 where the market just expects 0.25. Then we have a lot of like weakness from various PMI data. Okay, so last week was pretty in a way pretty active in terms of news events, but this week here generally quieter. Okay, so with that in mind, let's take a look at some of the analysis over here. Okay, now I'm going to start off with the dollar index first, and I think this week we may have a nice little opportunity on the dollar index, right? As we're speaking, we did see a little bit of a pullback right now. Okay, so this Monday when the market opened, we basically experienced a pullback all the way until today. Price of the dollar index seems to be coming back and retesting that 618. Now, for me, I'm actually bullish for this week, right? Which means I'm actually looking to buy the dollar. Now, based on Elliott wave analysis, what you can see over here essentially is from this peak that was established end of May, we have a clear 1, 2, 3, 4, 5. Okay, and then what we have is after that 5 wave moved down, okay, we had a very strong little push up as of last week, Friday. And this little impulse move here is potentially the first wave of a correction. Now, what that means is potentially this can be a simple, if I put in labels, right? This can be a simple A, B, C, right? And that's where we are looking to trade the move back up towards wave C. Okay, so right now we're seeing wave B developing. it may conclude and kind of terminate around that 618. And if you can see kind of a bounce, okay, that's where we kind of expect another pushback up. And that's the opportunity that we want to look into. Right. Now, we don't trade the dollar index directly. But what we can then also take reference from is going into like Euro, Pound, Aussie, right? Or even the dollar CAD, okay? Because if you're looking at dollar strength, okay, then that will also give us some insights into like how are we going to trade the major pairs. Okay, so if you look at Euro dollar, we're kind of currently testing, as we're speaking, testing that 618 right now. Right. So of course we do see a little bit of push up here. We just want to wait a little while, right? Because we are basically in this area right now. How the market is going to close off this candle. Okay, this is actually a forward chart. How the candle is going to close off that, and what's next. Okay, how it's going to react from here on. Now, the idea of this is basically if we can get, again, some kind of resistance and rejection basically around this area, we can expect a bit of a downside here, which is just basically the inverse of the dollar index. 1, 2, 3, right after that 1, 2, 3, 4, 5. Right. So don't jump in immediately now. Okay. But the idea of this is you want to look out for any sign of a rejection. It can be a candlestick formation. You can wait for maybe a bearish candle in the next candle. Okay. So maybe you need to wait out another 4 hours. Okay. The idea is as long as price is maintaining below this low, okay, any sign of a rejection here is actually a sell trade opportunity with a target back towards 1.0825 or even 1.0880. Okay, so that's the opportunity that I'm personally looking out for right now. This may come to us maybe by tomorrow morning, okay, depending on, of course, how price is going to close off this candle and the next one. Okay, so keep an eye on that. Overall, you don't want to be long-term selling it as of now. I think right now the idea is if you're looking to sell, I think the target is definitely here. You probably want to get out because we may see another bigger move back up after that. Okay, so short trade is mainly sell trade is mainly a short-term aspect for this week itself. Okay, so take a look at that. Focus a little bit on euro dollar. On the other hand, I'm actually bullish on pound dollar, right? So some of you may start to say, hey, but isn't that like contradictory, right? If you're buying the dollar index or you're bullish on the dollar, how can we also look at buying the pound dollar? What we can look into is, of course, the dollar may strengthen, but at the same time, if the pound actually strengthen more than the dollar, we can still see the pound dollar actually moving higher. Right. Now, why am I bullish on the pound dollar? Is because from a technical analysis perspective, from this low here, we have first push up, second wave down, third move up. And then right now we're doing this in a very, very corrective manner. Right. So most of the time, whenever we see a corrective structure, it's a trend continuation pattern, right? And obviously you can see this is an up move momentum. So any form of kind of like a pullback correctively, ideally if this comes out a little bit more, testing around that 1.2680 to 1.2650 zone, that would present a decent buy opportunity, right? So this one, you might need to wait a little bit more, okay? Because right now, we haven't really tested that area yet. We haven't really tagged it. You may want to wait a little bit while maybe tomorrow or Thursday. If you can see a dip and see price being supported around the zone, that's our buy opportunity to the upside. Okay. Now, in terms of pound dollar, where can we put our target? Okay. Now, depending, of course, how much of potential profits you want to capitalize on, right? So if you're going to be very, very conservative, you can just look to take profits maybe around 1.2890. Okay. So if you have any buy, your profit maybe about 1.2890, get out. Okay. If you're a bit more aggressive in terms of I want to go for more profits, right? The other level you can really consider will be somewhere around 1.3020. Okay, so it's pretty much a big gap in terms of profit potential. You may even consider like profit 1, profit 2, right? TP1, TP2, take some partial profits off target 1 and then aim for further targets. Okay, so that's the outlook of GBP USD. The setup and the trade potential may come later part of this week. Okay, so you can obviously start focusing a little bit onto that. Then we have we have Aussie dollar. Now, to me, Aussie dollar, I'm actually neutral right now. So why is that the case? Basically to walk you through a bit. Now, every time we get a fast little push up like that, right, and the market pull back at least towards the 50% mark, right, which is halfway of this entire move. I always like to just maintain a little bit of a neutral perspective, taking a wait and see approach. And, basically you want to see how price is going to develop after touching the 50. Right now, if we get a very nice little strong rejection of the 50, kind of like a bit of a V-shaped formation, then of course, any pullback here, we can expect more upside. Okay. Now, the other side of things is that if from here, it starts to just do a little bit of a sideways chop, okay, so that's a corrective nature, then there's a good chance we'll see a trend continuation, which is further downside, right? So 50% fits after a strong little move and then a pullback to 50% fit is usually a key significant kind of area that you want to monitor, but don't execute any trade yet, okay? So as I mentioned, you either wait for a V shape, okay? You wait for a V shape and then you wait for a pullback to look for buy, or if this is just going to do a corrective move, chop around sideways for some days, then there's a good chance this will continue dropping. Okay? And then that becomes a potential where you can look for sell. Right? So Aussie dollar, I think this week may not give us any potential trade yet. You probably just want to leave it aside. Don't want to pay too much attention to it. You focus on some other currency pairs. Okay. And then of course we have the dollar Canadian. Basically, after the news release, not much of a move. But I'm looking to buy the dollar CAD. Okay, so the idea of this here is, if you look at it from a perspective of this high, okay, we generally have a pretty sharp move to the downside, and then recently this starts to slow down a little bit. Okay, now what you can also start to observe is if you pull in your RSI. Okay, we do have a huge divergence building up. Okay, in fact, from here, as price keeps falling and making new low, our RSI indicator is actually making a higher low. Now, this is a principle of divergence. It means that the momentum to the downside is lacking, is slowing down, and there's a good chance that we may see a bounce or a reversal soon. Okay, so I'm not too keen in the sell trade on dollar CAD as of now in terms of like where the price is and how it's developing, but I'm more interested in the buy. Okay, so over here is that if we can get, what I'm looking here, you can see, right? Basically something like this. Okay, maybe we'll get another low, but overall we're expecting an upside. Okay, so how you can actually get yourself into this trade here is, of course, you can look for a break above the structured trend line. Okay, you can look for a break above this yellow trend line. Alternatively, what you can do is you wait for it to break first and then a pullback. Then only you get involved in the buy, right? That's something you can consider as well. Okay, but overall, I think the direction is upside. We may or may not get a trade this week, but you definitely want to pay attention to that. Okay, and then we have the dollar yen. I think dollar yen is also another pair that it's definitely worth monitoring. Right. So if you look at it from a larger time frame perspective first, right, we are testing the top of the channel. Okay. Now testing the top of the channel over here, definitely you wouldn't want to be buying. There's a good chance we may see a rejection to the downside. Right. And then on top of that, if I were to go down to the hourly chart right now, we may be seeing a potential double top, okay, with a divergence over here. Okay, so kind of double top-ish structure and then divergence, right? So if I had to adjust this, this would be the neckline. This point here will be the neckline between these two top, okay? And a potential reversal trade setup that you can look into is, of course, to trade the break of that neckline. Okay, so let me go back to the 4-hour chart. What you can look out for, okay, is to trade, or you can look to execute a trade, okay, to the downside if you get a break below 142.90. Okay, and then that will be a double top structure. There's a RSI divergence, and then we'll be looking at downside. Your target on this, okay, you may want to just draw in a channel over here. your target may be just the bottom of the channel itself, right? So if I'm going to stretch like this area to the left, you can see we do have a little bit of a previous reaction, right? A couple of bounce here, resisted, break above, bounce, bounce. So if you get involved in any sell, right, your potential target will probably be somewhere around this area. Okay, that will give you around like close to 139. Okay. So dollar yen, we're looking at downside. In fact, if you're focusing on the yen pairs, pound yen here, we're also looking at potential downside. Very, very similar to dollar yen. Okay, so we can't have this structure over here. We have the divergence built in. Okay, so we're expecting downside, right? So this one, again, if I trim this a bit, you'll be looking at a potential break below 181.69, right? Or if you round down a little bit, 181.65, that will be a breakout entry. Okay, then your target over here, hey, if you're very conservative, you can take FIPS, swing high to swing low, target at 50% mark, right? Which puts you around 177.90. So this one here and the dollar yen is essentially quite similar in the setups, right? So you might want to just focus on one yen pairs, because if you kind of take both of it, then just be aware of your total exposure. Okay, yeah. So take note of that in terms of the yen, right? Then we have gold. Okay, gold for me here is quite similar to a little bit quite similar to the Aussie dollar kind of like perspective, as well as the dollar CAD. It's a mix of these two. Okay, so gold over here, the idea is I'm not too keen in selling. The reason is because prices has been falling from this peak, right? 1, 2, 3, 4, and then potentially this is 5. I'm still expecting at least some kind of a deep pullback. Okay. So I'm not bullish. I'm not like very convinced that we can look for buy, but I'm not interested in the sell. Okay. So what am I looking out for in gold? What I would suggest you to keep an eye on is to wait for some kind of a break above this high. And you want this to break strong. Okay. Maybe if it's breaking above that trend line here is even better. And then you wait for a correction pullback. Okay, so essentially you're waiting for an impulse move, a correction pullback, then we'll look to buy. Okay, so this week, I probably wouldn't suggest to pay too much attention on gold, because you need to wait for a couple of developments before you can commit to the trade. Okay, and that can't take time, right? So you need to be a little bit more patient onto that. And I think this week you probably would not have much of a trade potential over there. Okay. So this is on gold. Crude oil over here, short term, we are potentially bullish, and then long term, slightly to a mid to long term, we are actually bearish on gold. On crude oil. Okay. So the analysis of this is quite, you can see, right, quite kind of like a smaller scale and then a larger scale. On the smaller scale, we have this channel, right, in white. Okay. So channeling is actually a very powerful technique to help us frame up what the price is doing. And channel usually indicates that price is developing correctively. Okay. So you can see we have the white channel, which is sloping up. And then we have the yellow channel, which is sloping down. Okay. Now, sloping up channel in the white usually indicates that after it completes, there's a good chance it will drop. Okay, sloping down channel in yellow is coming down, so it usually suggests after completion it will go up, right? So the channeling technique can give you some clue as to how you can look for direction. So short term, we would expect a 3-wave move within the channel itself. Right? So the potential target of the short-term potential buy trade is somewhere around $73. And once it tags this area, again, we have a very nice confluence of the top of the bearish move to the channel. Then we will look at our bearish trend down with a target at the bottom of the channel. Right. Now, of course, this is a little bit far off. I think within this week itself, if you're trading on crude oil, the focus is to look for buy opportunity towards $73. Okay. So that's on crude oil. Then we have S&P over here to walk you through a bit. S&P, after it hit this peak, we basically are coming down. This here to me is one move, right? Basically, the market is coming down not very fast. It's slow. So what we're expecting over here is a 3-wave correction, right? So one, we're expecting a little bit of a pullback. And after that, we're expecting this to come back down to complete that 3 wave. Okay. Ideally, it's going to be corrective in nature, and then we'll look for a buy. Right. So if I were to take the 236 away, we're going to focus more on the 382 FIP level. If you're looking into equities indices, suggestion is just to be patient. Okay. I doubt this week you're going to get any trade off the S&P 500. Okay. The idea of this is because we expect this to develop and then this to come back down. It takes time. Okay. We are on a 4-hour chart, so it takes time. Don't rush things through. Maybe come back next week or the following week for S&P. Okay. So there's nothing much there for now. Quite similar to gold, right? You probably just want to wait off, give it some time, come back maybe the next week. Okay. Pound yen, I think I mentioned just now, together with dollar yen, we're basically looking at the sell side of it. Okay. Euro pound, we are short-term bullish. I think the price is starting to move off a little bit. The target we're aiming for is somewhere around 8655. Okay. So again, if you are looking at this and say that, okay, the upside may not be very attractive, then what you can do is you wait for a setup around 8655 to sell. Okay. So if I were to update this a little bit, okay, I would say, if you don't have any buy on your pound right now, obviously the risk reward ratio on the buy may not be very attractive from here. Okay. So my suggestion is, instead of focusing on a buy, okay, you may want to focus a little bit on the sell side of things, right? So sell side of things, basically you're looking at around like 8655. Your stop needs to go above this rate invalidation level, which is previously wave 1. So that will be around like 8720. And then your target here again, if you're conservative, just aim for the previous low, 1:2 risk reward. Perfect. Right. If you want to go a little bit more, okay, you can actually, let me just use that FIPS to give you some levels. Okay, if you want to go for more, you can aim for around like 8480. Okay. So I think because of the current price development, I wouldn't suggest you to focus on the buy anymore. But what you can do is wait for price to hit this top, right? The top of the channel. Again, you can see 3-wave move, very corrective in nature. As long as it's respecting that channel, we expect this to drop. Right? So do look out for that. Aussie yen, quite similar to the pound yen and the dollar yen. Basically, the yen families we're expecting to drop a little bit. But for me, if you want to choose, I would say pound yen is a better option. Dollar yen is a better option to focus on, simply because you can see, right, price is currently at the top. So if we're looking to sell, we're basically selling at a higher price. But Aussie yen has started to fall. Okay, so if you're looking to sell the Aussie yen, your downside may not be that interesting. Okay, and anyway, this is quite similar to Euro pound, right? Short-term upside, then down. So Aussie yen is short-term downside, then potentially up, right? So this one you can see again, 1, 2, 3, very corrective in nature, and then we have the channel. Okay, so we're using basically the channel to support, right? So you can see here also a little bit of a channel coming down very slow, upside, coming down very slow, upside. Okay. So Aussie yen, probably not too much of a sell trade this week, but you can look at pound yen and the dollar yen. Pound Australia, my suggestion is just leave it aside. If you're looking at some of this kind of cross pairs, there's nothing there, right? Just put it aside, don't touch it. BTC, crypto in general, I would say we are definitely in a bullish kind of like bias. We're definitely focused on the buy, but whether to buy at this price point, my suggestion is probably, if you want to be a little bit safer, wait for a pullback. Right. Now I put in a 50% FIPS here. Does not necessarily mean price will need to come back down, right? What you can do is essentially just do a little bit of a push here, right? Maybe around this level, and then it bounce. The idea is the 50 gives us just a reference point. If we start to see price develop in a corrective nature, okay, what we can do is we can look at it as a 1, 2, 3. We can use the bottom of the channel as a potential buy entry as well. Okay, yeah? So BTC in general, or crypto in general, I think we're in a bullish phase. But of course, you want to then wait for a pullback for a better price to get involved in the buy trade. Okay. So those are a few things that I'm personally looking out for. I would say the focus would be very much I would say the focus will be very much on the euro. Okay. Again, the trade may come to us maybe tomorrow. Okay. If you want to wait for rejection or maybe the next candle to form a bearish candle before you get involved, then that will be tomorrow. Okay. And then of course I'll be looking at pound dollar here for potential buy. Okay. This may come maybe on Thursday or Friday. Dollar Canadian here as well. Okay. Perhaps Thursday or Friday. And then the yen pairs, we're basically looking at sell, right? So that will be the dollar yen as well as the pound yen, right? These two are the focus for me. Then the rest of this, that I mentioned, probably not going to be the focus for this week, but maybe going into the future, like next week, the following week, something may set up, and then you can then focus on that after that. Right? Okay, yeah. So generally, those are the few instruments and opportunities that you may want to keep an eye on, okay, for your trade. Now, I don't look at all currencies, right? So you realize that, some of the crosses I doesn't look into, some of the franc pairs I don't look into. But let's say if you have any particular pair that you're looking at, you like to trade, okay, feel free to type into the chat, right? So that I know that's something that you're interested in, and then we can look into it. Okay, because if you look at what I'm looking at and focusing, basically these are the list of instruments that I focus most. Okay, those that are not in this list, I don't really focus much on that, but we can always run through an analysis onto it. Okay, great. So I see Daryl here actually asked about the US 30. Okay, so that will be the Dow Jones, right? Cool. Let me take a look at it and then we run through an analysis of it. Okay. So I will start off with the daily chart first. Okay. Kind of give me an overview, a bigger picture perspective of what's happening. Now on the daily chart, the first thing I observe very clearly, okay, I think all would agree, is that we have this low and then the market actually pushed off very strong. Okay, that's on the daily time frame. So after this very strong push, what happens next? The market starts to do a correction, right? Basically a very sideways move, doesn't really go very fast. And this is what we call correction. Okay. And within this correction itself, I think one thing that is very, very obvious is that we can see from this peak here, the market came down 1, 2, 3. Okay. So the market tends to do in trees, right? Sets of trees. After that, the markets bounce, but it doesn't really break that high yet. And then it started to pull back, right? So in terms of this pullback here, we can start to see from this peak here, we have 1, 2, and therefore we will expect a third wave down. Okay, so market tends to move in trees, so we expect this to maybe come down a little bit more. Right? Now, what you also observe is that this little high actually broke this high, okay, but did not break that high. So this usually indicates to me that from an Elliott wave pattern, we have two potential scenarios. One is this comes down and break this low, and it forms what we call an expanding flat, and then it bounces higher. The alternative pattern is this comes down, but it doesn't break this, okay, and then it bounces. Now this then is what we call a running flat structure. Now obviously we won't know like what is going to happen now, right? But what we can always do is we can take the RSI indicator to give us some idea as to whether we're going to see a running flat or an expanding flat. Okay. Now, if it's going to be a running flat, right, what it means is that this will come down before it breaks this. Okay. The RSI would actually break the previous low first. Okay. So look carefully, right? This one reaches this point, doesn't break that low, but your RSI actually go lower and break that low. Now, often this is what we call a hidden divergence. And of course, if you already have an oversold, it tends to bounce, right? So this RSI indicator would give us some clue, right? As to, are we going to get a running flat or are we going to get an expanding flat? Okay. So suppose, this reaches here, and then in terms of your RSI, okay, it probably just stall around here, which doesn't break that low yet. Then you can expect this to keep going a little bit more. Okay. But overall, in terms of the bigger direction, okay, on the daily scale, we are anticipating the fact that after this correction is done, we'll expect more upside, right? So if I were to do a little bit of projection, it's probably something like this. Okay. And from there, of course, this can come a little bit lower and break that low, and it just forms a bigger correction. But long-term bias is eventually upside. Okay. So how we can potentially set this up as a trade idea, right? At least from a daily point of view first, right? I think one way to look out for it is somewhere around that 618, right? If you can get a pullback back there, see some support around this zone, then naturally that will be a buy trade to the upside. Okay. So that is going to put you around like 32640, right? That's the area to look up for it. Now, if you go down to a lower time frame, okay, then can you look for a sell trade, right? So on the bigger time frame, you're looking at a buy. On the smaller time frame, can you look for a sell? The answer is definitely yes, right? So what you then need to look up for if you want to sell, okay, you got obviously I would always use a lot of fits. Okay, you can look up for a 15-618 pullback, and you apply the same principle, right? If this is coming down fast, you want this pullback to come up slow. And then of course you can do a little bit of a channeling technique. Okay, ideally this should go up in a corrective manner, right? So three-wave push up towards 15-618, that may present you a sell opportunity. Coming back down here, okay, towards this low, and then you can take profits off your sell and then potentially rotate that into a buy position, right? So that's on the Dow Jones, right? US 30. Yeah, so I hope it clarifies. I not only give you an idea of what I'm looking at, but also to give you some thought process, explaining my thought process as to how I look into the charts, why I look at it from a certain point of view. And then of course you can then use this to apply into your own trading as well. All right. Okay, another pair here I see is from Daud, asking about Euro AUD, right? Okay, so same thing here, right? We always start off with a higher time frame to give us a bird's eye view, and then we zoom down to a lower scale. So obviously, again, this is quite obvious a low, okay, and of course, this is quite obvious a high, right? And then after that, what the market did was a pullback. So we always start with the obvious thing, right? The obvious thing over here is we do have a three-wave move down, okay? So that may again complete the pullback, right? Because the three-wave move is a complete set, right? You can see over here, basically we have a three-wave move, 1, 2, 3, okay? And then as we're going up, we also have a 1, 2, 3, right? So the market likes to move in sets of 3, right? So what we have over here is an ABC, okay? Now, obviously, can this come back down another 1, 2, 3? The answer is yes, okay? Because if that's going to be the case, then we also have a bigger three-wave move, right? In the internal, we have 1 to 3. Now, how would we know exactly, are we going to get a further move downside, or this is likely going to keep going higher? Right now, we don't have sufficient information to kind of decipher the higher probability, okay? But the idea is what we have right now is a V shape on the daily scale, right? Now, if this pulls back correctively, okay, then it suggests that there's a higher chance this would start to go higher. That's where you start to look for a buy. Now, if this here rejects down fast, right, giving you another V, then of course that would suggest that this may come down and make a bigger one before the long-term upside. Okay, so right now we don't have this piece of information, so we won't know which is a higher probability. Okay, so that's at least what we can see from a daily chart. Okay, now if you start to go down to a lower time frame, okay, you start to observe a little bit more information, right? And you can see this basically how price is developing. Okay, again, whenever you see some kind of pattern like that, you pull out your RSI, it always gives you a divergence. I would say 90% you will have a divergence. So this again suggests that you do not want to be buying into the market now, right? Because there's a good chance this will pull back. So that kind of aligns with the daily chart, right? Because just now we mentioned you want to wait and see what's next. If this is going to come down fast, you don't buy it. But if this is going to pull back slow, you can look for a buy, right? So right now, the idea is we are expecting the downside. The question is this going to come down slow or is this going to come down fast? Okay. So you can obviously capitalize on the downside if you're more of an aggressive counter trend trader. Okay. But again, it's up to you whether you want to be more aggressive in that selling of it. Okay. If you're more conservative, my suggestion is just wait. Okay, give time and see how the market is going to develop here. Now, if this just drops like that, it's fine. You don't need to catch this, but you wait for a pullback and then you catch the next move, right? Because again, it moves in 1, 2, 3. Okay, so again, depending on your style, conservative or aggressive. Okay, so that's my view on Euro, right? So basically, as of now, you probably won't have much to do. You want to wait for price to give you the next clue. Okay, then you know like what's the higher probability moving up from there on. Okay, yeah, so that's the view on it. If I were to put in a little bit of FIPS here, okay, there is also a good chance where again, you know, if this starts to come down in 3, we may see this pull back towards the 50% before the bigger move back up. Okay, so same thing here. The principle is after a move, there's a good chance the pullback will come towards 50%. Okay. So that's my view on Euro Australia. At least for the near term, I don't think there will be any potential trade unless you are an aggressive counter trend trader who is interested in selling it. Okay, yeah. Okay, another pair here that I see is from Pang, right? Asking about the Aussie CAD. Cool. Okay, so same thing here. This is a daily chart. First thing you observe is we do have a V. Okay, a V shape, you know, basically is a strong rejection pattern. Okay. Another thing that is very obvious from a daily scale is that this is the low. Okay, and obviously that's the high. Right. So from a daily scale, unless price breaks this low or this high, we're basically back in a range environment, right? We're trapped in this zone. Okay, so daily, to be honest, there's nothing much we can really look into, except for the fact that we have a strong down move recently, right? So there's nothing much I can actually take a look at daily. So we definitely need to then go down to the lower scale. Right? Now, lower chart on the 4-hour right now, there's a potential where this may be a double bottom. Okay. We do have RSI being oversold here, and therefore we are looking at it as a potential bounce. But is this going to be a move that bounces up significantly, or is this just going to be a small little bounce of a reset and a continuation downside? Right now, we don't know. Okay, the reason is because this is too little piece of information, right? Because this can just keep continuing up, maybe in the next 1 hour or 2, or maybe, you know, in the next 4 hours, it continue to go up. Then we have a V. Then when you have a V, you wait for a pullback, you look for a buy. Okay, pretty straightforward, right? But what can happen is the next 4 hour can come down, the next 4 hour can go back up, the next 4 hour come down, and then if it's developing like that, then don't buy. Okay. So the idea again, when I say you give it some time, we need more information, is basically we want to see how the market is going to develop. Okay. So right now, based on this chart here, there's 2 ways to look at it. If this again continue up, right, you wait for a pullback, you look for the buy trade. Okay. Now, if we don't get a strong push up from here on, okay, and the price just stall here and then we just chop it around, you can look for a sell with the target going back to the daily chart all the way down to this previous low. Okay. And then that may be a bigger daily double bottom. Okay. So Aussie CAD pair right now, my suggestion is give it at least another 2 to 3 days, right? So today is Tuesday, somewhere around Thursday or Friday, you come back. Okay. Thursday and Friday would probably put you somewhere there. Okay. So we have sufficient time for price to develop into something, right? As I mentioned, if this is going to keep going up a little bit, by Thursday or Friday, you would see if we can get a pullback, you look for a sell. Maybe that will be a late Friday trade going into next week. Okay. Again, same thing. If this chops around, by Thursday and Friday, you can see that very clearly. You want to then look for a sell maybe next week. Okay. So that's the rough estimation in terms of timing to give yourself. Yeah. So I hope that's clear on Aussie CAD as well. Okay. So yeah, so I think the market doesn't really move much from now. Okay. So yeah, generally everything is still intact. Okay, another question I see over here is from Ibrahim. What is my fundamental opinion on the next Fed interest rate? Okay, so to kind of put everyone on the same understanding, the previous Fed FOMC, basically there is no hike. Okay, they actually stopped hiking, but the Fed did mention that there might be another 2 potential hikes. Okay, in this year. Okay, basically maybe July 1 and then September 1. My personal take is it's very difficult to predict as to whether the Fed is going to hike it or not. Because we have in fact seen inflation data coming down, right? CPI in the US has been falling quite significantly. Okay, which means again the hiking of interest rate has effect, right, on inflation. And we have already right now crossed a very important point, right? So you can see interest rate. Let me just bring up the data for you. Okay, let me filter this off to just US. Okay, so you can see I think previous week. Okay, so first thing you can see, Fed has hiked it to 5.25, right? So last time, the recent one where they stopped it, but basically interest rate is at 5.25. CPI year on year is now at 4. Okay, so if you still remember, there's one session that we did in the sharing, like I think way back. Okay, I shared that based on historical data. Okay, when inflation was very high, right? So the peak of inflation was last year, going as high as somewhere around 7%, right? And then interest rate was very low. Okay, so that what happened was the Fed starts hiking to bring interest rate down. Now the key point is where both of this cross over, right? Is going to cross over because one goes up, one comes down. At one point, it's going to cross, right? So right now, what we're seeing is that interest rate has risen way past inflation, CPI, right? So what can happen over here is while the Fed did say that they are still thinking of 2 hikes, my take over here is if the next CPI data comes in from 4%, it drops lower, I doubt the Fed is likely going to hike it again. Okay, the reason is because interest rate is always lagging, right? I mean, actions and decisions from policymakers are always lagging. Okay, because it simply takes time for the economy to keep track of all this data, right? So if you take a look at the next CPI data that is coming in, okay, somewhere here, right? Mid-July, right? We have another CPI data. That is before, okay, the next FOMC, right? Which is end of July. So the idea here is if you keep track of this CPI data in mid-July and we see that, okay, from 4%, it continues to drop maybe to 3.6, 3.5, right? There's a good chance the Fed may say, okay, probably that's about it. We are looking at CPI dropping, have in mind that their target of CPI is 2%, right? Long-term 2%. So if it keeps dropping lower and lower without them starting to hike rates, or I would say without them needing to hike rates, it's probably going to end off at about maybe 5.25. Or even if they decide to hike it, I think probably one more time. And we'll very quickly start talking about cutting rates next year. Okay, that's my take on the fundamentals of things. So if you take a look from my perspective on this, if you take a look at the dollar, fundamentally long term, I'm actually bearish on the dollar. Okay, so in other words, if I look at this from this perspective, right, this bounce here may be temporary, and then after that, we'll look at the long-term bearish perspective of the USD. Because when the Fed starts to discuss about the potential of cutting interest rate, that's where we're likely going to see the dollar starts weakening. Okay, so that's my fundamental take in terms of the USD. Okay, another one here I see is German DAX, right? Now German DAX, my take is it's not bullish. Okay, let me just pull up. Okay. Yeah, let me just pull out a proper data feed, right? So German DAX over here is very different from the US market. Okay, so you take a look, this is a forward chart, right? If you go to the daily, we don't have a bullish move now, right? In fact, if you take a look at the daily chart on German DAX, we kind of have a little bit of what we call a double topish formation with a divergent. Okay, so it's not a bullish market now, right? Don't buy now. But of course, what can happen over here is this may just do a little bit of a pullback. Okay, maybe coming back towards this area, and then we can look for a bounce, right? So short-term wise, I think there's a little bit more downside for the German DAX, right? If you go down to the forward, what you can look out for is, of course, if you get a break of this structure here, it opens up a little bit more downside, right? So again, if you take FIPS from low to high, okay, it may not be very attractive if you actually decide to sell it and then take profit here. Very, very small move, right? But what you can look out for, of course, if you get a pullback, okay, correctively, okay, you can look for a sell with a final target around like 15450. Long term, I think eventually it's still going to go up. Okay, but of course, short term, I think there's still more downside, especially after this topish formation and then this very strong drop. So any corrective pullback would be seen as a sell trade potential to the downside, at least for the short term. Okay. So of course you can use like some FIPS here for reference point, right? So you can have like 50% if you can get a corrective pullback, okay, around like 16,000, then you can look for a sell. With just now the price point here I mentioned is about 15,400 plus, right? Yeah, 15,440. Okay. So that's my take on German DAX. Okay. I mean, long-term equities are generally going to go up. Okay. It's just a matter of like short-term, if you're trading it, you know, sometimes you can still capitalize on the downside. Okay. Good. Okay. So overall, these are the few things to note. Yeah. So I mean, generally this week, don't expect a lot of movement, right? Simply because there's not much of a news this week. Let me just clear off that. Okay, that's not a lot of news that's very, very significant this week. So don't expect, you know, every week the market is going to be like very volatile, right? Sometimes you just need to be patient, you know, like take a look at this chart here. You don't want to be squeezing any trade when the market is doing this, right? It's so difficult to trade within this kind of environment. And this period here, you can see is basically ranging from like last Thursday, okay, all the way until now. So it's basically almost like 1 week. The market has been slow for this pair. Okay, so you just need to be patient. Don't try to squeeze something in when the market is not giving you what you want. Okay, so I think this week the focus, as I mentioned, couple of things, right? But don't rush into trades. Okay, good. Okay, Leong here asks about silver. Take a look at that. Okay, so we'll start again, same thing on the daily. Okay, I think silver may be a little bit cleaner than gold. If you're looking at it right, we get a very nice bounce at 618. Some things that are obvious on the daily, of course, we have this low, right? Okay, the market actually had this high, it came back down 1, 2, 3, reacted around that 618. So if you go down to the lower time frame, we have a V, right? So this is the 618 bounce, right? So we have a V shape. My suggestion here is if you're into silver, okay, wait for a decent corrective pullback. Okay, so what I mean by that is, let me just take some sample of what I mean by corrective, right? Something like that, right? I mean, it probably not going to look exactly this shape, okay? But it looks something like that. That's what I mean by corrective, right? So you can see basically this is very fast, this is very slow. If you can get a setup like that, then this area here will be a nice little buy trade for silver. Okay. So you again, I think if you want to wait for a correction, you probably need to wait until like close to Friday, right? It's a late week potential trade or maybe early next week trade. For silver, if you actually look to buy, my suggestion is you can look for long-term upside. Okay. The reason for that is tied in a little bit to the fundamental of the dollar, right? I mentioned just now, eventually the Fed will start discussing about cutting rates and the dollar will going to be weakened. So if you're looking at XAG USD, right, you're basically trading against the dollar. If the dollar weakens, then of course there's this huge upside potential of silver. Okay. So if you are focusing on some of the commodities like gold or silver, right, the long term here presenting to us is a very huge upside potential. So what you can look out for is potentially taking a trade using maybe a shorter term approach, like smaller time frame, but don't take everything off your buy trade if you're moving in profit, right? You might want to get out a little bit, take partial profits, but always leave a small portion for your buy to just ride it, right? Because you never know how far it can go. And if you take a look at historical movement of all these commodities, they always do, you know, this one here we don't have data, but basically you always do this, it bursts up, it do this, you never know, maybe this is the time it's going to explode to the upside, right? So don't cut yourself short. Same thing in gold, right? So take a look at this consolidation, explosion, consolidation, move up. This one here is probably consolidating. We never know when it's going to go higher. Okay. So if you manage to get involved in buy and you're in a profit for silver and gold, okay, just take partial profits, at least leave some portion for the big move outside. Good. Okay, yeah. So those are some of my takes on some of these instruments over here.
Thanks for watching. Keep supporting us. Click like and follow for latest educational videos, or you can join our Telegram support group at Best Financial Educational Support. Have a good day and trade safely.